welcome to lesson number 4 of how to use Fibonacci retracements correctly and in the right way. Fibonacci retracements is a tool that you can use to find support and resistance zones in the Forex market. So these are the levels that I use. Okay, we have the 38.2, we have the 0.5 or 0.50%. We also have the 61.8 and the 78.6. Now, I've marked these two in a different color. Why? Because these are very strong support and resistance zones in the market itself. Now, 61.8 is of course the golden ratio or the golden level of the market, and the market um, really loves to test and really loves to get to that zone in order for its next move to the up or downside. Now you can see also I have these different levels on top here. These different levels are levels that we will use in our premium group, and you guys can learn more about that if you join our premium group as well. So just take a screenshot of these levels. If you'd like to trade the same levels as I'm trading as well, you can take a screenshot now and use the same levels as what I'm using now. So let's get into it and let's learn how to use the Fibonacci retracement tool correctly. So to start off with, this is a definite uptrend. As you can see, we've had a nice impulse to the downside. A nice correction to the downside, and then we have the next impulse to the upside, and the next correction, and the next impulse, correction, impulse, correction. As you would have learned in my previous videos, that this is how the market will move in waves and also move like this every day. Now, in order for us to find our Fibonacci levels and how to trade these Fibonacci levels correctly and basically to profit off the Fibonacci retracement tool is by using the lowest low of the move to the upside so that we can basically get our levels in the market. Now, let's have a look at what we explained on the last lesson with using trend lines. So trend lines and also support and resistance zones. So clearly you guys can see, just a quick one, that these are definitely a support and resistance zone for this pair. As you can see, we have support and resistance here. So basically what the Fibonacci is doing is it's helping you um, to basically get these levels and trade easier with these levels. So what we have to do with the Fibonacci retracement is we need to put our Fibonacci retracement on the low, okay, because this is the beginning of a new impulse to the upside. So we want to find out where the market is going to go down. So we need to use our impulse in order to get the Fibonacci levels. So what I mean by this is taking our Fibonacci level, put it right at the low of the impulse and all the way to the high of the impulse, to the highest high of the impulse, like something like this. Let me zoom in for you guys so that you can see nicely. So basically, this is how we find the levels of structure and also find the levels of support and resistance in the Forex market. So you can clearly see that the market has definitely used the 0.50% to basically make its next move or next impulse to the upside. Now, with this said, it's very easy for us to see how the market is moving if we use a Fibonacci retracement level. Now, if I basically show you guys that this 50% level basically lines up very much better with structure. With the structure, what I mean by structure is if you look at the previous, if you look left and you see the previous leg, what happened on the previous leg, you can see that the market basically respected this area very, very nicely. on the 50% Fibonacci retracement. This is what we call structural market. So basically, the market has respected it year and year. So always look left to see where's the better structure of the market so that you can see where the market will do its next push to the upside or to the downside. So with this said, now let's have a look at how we're going to move our Fibonacci retracement to the next impulse. So like I said earlier, if we've already traded this impulse and correction, we already entered the market here and we've now started our push to the upside. Once we've got our profits at this area over here, basically what we need to do is we need to take our Fibonacci from this low to this high of the impulse. So what we'll do is we'll take our Fibonacci from this low all the way to this high, and you guys will be able to see that the market respected this area very, very nicely, which is the golden ratio, 61.8 ratio area that is more into confluence with the previous support and resistance over here. So you can see very nicely that this is more into confluence. So what we need to do is we always need to put our Fibonacci and actually wait for the market to show us where it wants to go. Sometimes the market will respect this previous support or previous resistance area. Sometimes it will not. Sometimes the market will move down. It might respect a different support and resistance area and then go to the upside. So let's always wait for the correct move or the correct pattern, the correct level of the Fibonacci retracement before you guys enter the market. Now, with this said, if we have a look at the next impulse, what are we looking for in the next impulse? I think you guys have guessed it right, and I think you guys know how to use this tool already. So it's very easy. Once we have profited off, that previous impulse, once we have taken our profits here, and we are looking for the next impulse to the upside, and where to enter the market, we need to move our Fibonacci basically to this low and this high again. Very, very simple. So what we'll do is let's take our Fibonacci from this low to this high, and you guys would be able to see that the market has basically respected the 38.2, which is into confluence with this previous support and resistance level. Now, like I said before, sometimes the market will come deeper and test a different level of the market and then move its way to the upside. But we need to always be patient and wait for the correct move and wait for the correct time to enter the market. Now, with saying this about the Fibonacci retracement, I hope you guys understand this, and I hope that it gives you a better understanding about using Fibonacci retracements. If you have any comments or questions below, you guys can see you can see the links below. You can give us a like and comment in the links below, so that we can get into touch with you guys and it's easier for you guys to learn. Please don't forget to give me a like and a share, and also subscribe to my YouTube channel that I've created in order for you guys to learn about the Forex market and how the Forex market works day in and day out with different types of strategies, price action, Fibonacci retracements, trend lines, also IC patterns like we explained before. We always have this in the market, and this is one of the best strategies that you guys could get in the market. We always have an impulse, a correction, and an impulse. If we would like to take this, all we need to do is we basically need to find the high of the impulse in order for us to find the level in which the market would like to move to the upside. So I hope you guys enjoyed this video, and I hope you guys learned a lot about this. Please don't forget to check out my Facebook page, and also my Instagram is linked to my Facebook page, so you guys can check that out anytime, anywhere. So let's have a look at a real pair and how this pair has moved in the past in order for us to check our Fibonacci retracement levels. Now let's have a look at let's have a look at our at this move around here. So we're going to look at this move on the daily chart. Basically we can see that there's a very nice low around this area, and then we have a very nice high around this area with a retracement to the downside. Remember, the market always moves in impulse, correction, impulse phase. So what we need to look at is we need to look at taking our Fibonacci from this low to the high of the market, and you guys will be able to see very clearly, very easy, that the market has respected this 50 mark, or the 50% retracement, and has then moved to the next impulse to the upside. So this is a very simple strategy that you guys can use day in and day out on the market. It's very easy. If you guys like to learn more, you guys can more than welcome to let me know. And don't forget to leave your likes and comments in the section below. With regarding to a downtrend is exactly the same as an uptrend. So basically what we're doing is we're moving it from the high to the previous low, and you can see that this has respected around this area over here on the 38.2 area. So it's very easy for us to see that the market always respects different different areas in different Fibonacci levels in the market, and we will be able to profit from this kind of move. If you have entered the market here, you have a very nice ride all the way down to the downside, and you have very good profits in this kind of market. To the downside, to the upside, it's exactly the same concept, except for the downside you're going to use your Fibonacci from the highest high to the lowest low in the impulse area. So here's the impulse, correction, impulse again to the downside. Remember, our market always moves in an impulse, correction, impulse um, movement. I hope you guys like this video. Don't forget to like and subscribe to my YouTube and Facebook page, where there will be much more educational videos about this. And also, don't forget to give it a share so that we can create a nice community for our Forex Forex community, that makes sure that we can all benefit off this kind of movements and these kind of strategies from the Forex market. So make sure that you guys give me a like and comment to really help me to give you guys better understanding about the market and how the market works day in and day out. Thank you very much for watching, and we will see you guys in the next video.